Welcome back to the Patrick Lane Show, where we talk about real estate, investing, and personal finance. So if you haven't already, please do me a favor, hit the subscribe button, definitely hit the like button, and go ahead and ring the bell so that you get notified every time we post a new video. So today, I want to talk about something interesting that's going on in the stock market. And frankly, I just was unaware of all of this that's taking off in the last few days. But last week, at the end of the week, I started hearing rumblings about the stock GameStop turning around and starting to come back. And frankly, in my mind, I thought of GameStop as a brick and mortar store, an old sort of traditional retailer. The only interaction I've had with it is taking my kids in to check out the games and trying every now and then to sell a video game back to them. And, you pay $100 for a video game and they want to give you $5 when you take it in to try to sell it. And frankly, I just didn't think that business model was going to work much, because what's going on in the video game space is that most people now, instead of buying the little disc, they're just downloading the digital copy onto their computer or their gaming platform or console, whatever they're using. And so the idea that GameStop was coming back, especially after the news that during the pandemic they really got hit hard, and I think they ended up closing 4,000 stores across the country because of what was going on with the sickness in 2020. So just out of curiosity, at the end of last week, I drove by the local GameStop store here, and sure enough, it's still closed. So I couldn't figure out what was happening with the stock. Why was it starting to inch up going into the weekend? And so the more I did some reading on it, the more I realized that, first of all, there is a sort of a turnaround story with GameStop, because the guy who created Chewy.com came onto the board during the summer, had bought a bunch of shares of GameStop, was really sort of being an activist investor. He got himself onto the board of GameStop. He also got two of his associates or employees, high-level executives who were at Chewy, to now be a part of the GameStop board. And so there was sort of a little bit of momentum about turning the company around and changing it from the old brick and mortar model to a new digital online retailer for video games and consoles and all the accessories that go along with those things. And so I thought, well, maybe that's what is really sort of buoying these prices of the stock. And then the more I started reading about it, the more I started thinking, well, if it pops a little bit, I can understand that. But the stock price just started skyrocketing, and it goes from $20 to $30 to $45, and today it's up over $350. Now that's a pretty meteoric rise, and so what's going on there? And so when I started digging more into it, here's what we found out, and it is essentially that there are the retail investors out there. Those are people who, like you and me, who instead of going through an old-time brokerage and paying fees to a account manager, to somebody who's going to manage your money and tell you what stocks to buy and that sort of thing, and then take a few percent off of everything you make, the retail investors, so-called, are now downloading things like Robinhood and WeBull. By the way, if you want to download Robinhood or WeBull, check out the description below. I've got a link down there where you can sign up and both of us get maybe some free stocks if you use that link. So check those out down below in the description. But the retail investors are using Robinhood, WeBull, other zero commission platforms to buy into any stocks. But in this particular instance, what they've done is they found out that some hedge fund investors or large old-time sort of investors who had purchased short positions in GameStop had bought a lot of short positions, and that upset people. And because they thought with the Chewy people coming onto the board, there really was going to be a turnaround in the company. And so what they've decided to do is sort of become a crowd-funded activist investor group by all talking about it on Reddit discussion boards and that sort of thing, and decided to focus their energy on making sure that GameStop was going to be a good investment. And not only that, what happens is the byproduct of that is that all of the people who had shorts in this, so I guess we should take a step back and sort of give an idea of what a short is, because I didn't really have a lot of knowledge about shorts until I started looking into this in the last few days. A short is when someone buys a stock. Actually, they don't buy it. They borrow a stock from somebody else. They take that stock and they say, I think this stock is going to go down lower. It's going to be worth less in value. So they take that stock and they try to sell it to somebody else. So when they borrow the stock, it might be worth $20. But then when they try to sell that stock to somebody else, they sell it for $15. And they end up profiting the difference between 20 and 15. That is the short. And then what happens is that person who buys it can either hold on to it, or they can do it again, sell it as a short to somebody else. So you end up with a stock that actually could be traded on shorts more than they actually have stocks out there to be purchased, which is a crazy phenomenon, right? So what happened was there's the people on Reddit, on the WallStreet Bets forum on Reddit, found out that there are some huge short positions on GameStop, and it upset them. And so they decided that they were going to buy the GameStop stock and try to make sure that the price went up. Now, the effect of that is, number one, it drives the price of the stock up, right? So anybody who bought it $20, who bought it $30, who bought it $40, now with the stock up over $350, they're really making out. They've done a good investment from the standpoint of what the stock price did. Now, on the flip side of that, those people who had the shorts, that original owner of that stock who they got it from to short it, now have called them in and said, listen, we want our stock back. And the way the shorts work is that when the price goes up above what they bought it for, so that $20 in that hypothetical that I used, when that stock price goes up above that $20, they owe the original owner of the stock that difference. So as the price of GameStop went up past the $20 to the $30, the $40, the $50, the people who bought the shorts at 20, thinking it was going to go to 15, now owe the original owner of the stock and the difference in the price. So if that's $30 now and they bought it at 20 to short it, they owe $10 on that $20 stock. So what happened was the hedge fund guys who are used to doing this sort of in the background, and it wasn't out there in the public, although it's public information, but it's not really talked about too much on the business channels. What happened was those guys really got hit because the stock price just went up and up and up and up. And so they were owing huge amounts of money. Imagine having 1,000 shares of something and you think you're going to make $5 per share on it when the price dips, but in actuality, the price goes from $20 to $300, and now you owe $280 per share on that stock, and you've got 1,000 shares of it. That's $280,000 that you thought you didn't know you were going to have to owe 24 hours ago or 48 hours ago or a week ago. And so it really hit them hard. There was one that actually owed, one particular hedge fund guy owed $2.75 billion to the original owners of this stock. And so what's happened, and that whole process is called a short squeeze. When the person who has the short thinks it's going to go down, but then the price actually goes above where they bought that short for, the price that they bought the short for, that process of it going up is called the squeeze, because what happens is those people end up buying in again at a higher price to try to cover their losses. And so they, in effect, drive the price of the stock up as well. So they're exaggerating the loss by actually trying to stop the loss because the price keeps going up and up and up and up. And so that's the crazy thing that's going on here, is that the stock is, number one, the price is being driven up by retail investors. Those are just the everyday investors who have a Robinhood or WeBull, link down below, on their phone, who are wanting to just be a participant in the investing game. And number two, it's also driven up by the people who are the hedge fund people who are losing the short positions, who are losing on those shorts because they want to try to cover and regain or limit those losses as much as possible. But the act of both of those together is driving the price up. The retail investor drives it up a little bit. The short investor who's trying to cover his loss drives it up a little bit more because he's got to buy shares. Then the retail investor drives it up more. Then the short drives it up more. And it just keeps going and going and going. And, of course, all of the institutional sort of old money, traditional investors are on the business channels, and they're just going crazy. They're losing their minds because they can't believe that this is happening, and they can't figure out why. They keep calling all the retail investors, saying that they're unsophisticated and they don't know what they're doing, and they don't have the knowledge that the analysts on Wall Street have, and all this sort of stuff. But then you also have people pushing back against that and coming in and saying, look, these guys on WallStreet Bets have done their research, and they've posted some of that research out there, and you can see exactly what their thinking is behind buying it in the first place, or being upset that someone would short the stock when the company was trying to engage in a turnaround to really transform the company going forward. So it's just a crazy phenomenon that's going on right now. It's really upsetting the institutional guys who, frankly, let's be honest, those people have been doing this for years and years and years behind the scenes, okay? You get 4, 5, 10 of these investment guys, whether it's hedge funds, whether it's big institutional investors. They go to lunch, they have these investment meetings or investment dinners, and they sit around and they talk about what they think is going to happen with this stock or that stock. And some of them decide to buy into the stock, and that moves the price. Well, if you're a hedge fund manager and you can buy $500 million worth of stock in one day or over a series of a few days, that moves the price, and you benefit from that. If you buy those shorts and it moves the price down, that's what happens, right? Someone who buys shorts will say, hey, I think this, I'm going to announce publicly that I think that Tesla or GameStop that we're talking about is going to go down. So I'm going to buy $1 million in shorts in GameStop. Well, that automatically, when it comes out, is going to push the price of the stock down, because people are thinking, hey, these guys make a lot of money by being right, so they must have some analysis that says this stock isn't worth what we think it's worth. So then the price goes down. So it's almost a self-fulfilling prophecy. Well, those people, the institutional investors, the analysts, the hedge fund investors and managers, have been able to take advantage of that over the years and benefit from it. And now, in the last few days, what's happening is the retail investors are doing the same thing. They've gotten together in their little chat room, and they've said, or the thread on WallStreet Bets on Reddit, and they've said, we think this is a good stock, and we're going to invest as much as we can in it. And it just plows in, and it carries over, and it multiplies. It's a snowball that it just keeps growing and growing and growing. And and the bad thing is, for the Wall Street institutional and hedge fund people, is they're on the wrong side of it this time. And they're upset, and they're scrambling to try to figure out, number one, can we get out of it? Can we close our position? Can we limit our losses? And secondly, how do we keep the retail people from doing this to us again? So it's a crazy phenomenon. Now, should you go out and buy GameStop right now? I don't know. I'm not a stock picker. I'm not an investment advisor, so don't go buy it based on anything that I say or anybody on YouTube or whatever. Look at the company before you go buy a stock. But it's crazy to think that, if you had put $1,000 in GameStop a few months ago, or a year ago, you'd be a millionaire today just because of this run up. It's crazy. The guy who started the discussion in the WallStreet Bets forum on Reddit actually posted what his original position was, and he had a position of $50,000 in GameStop, and because of what's going on with this, that's up over $22 million now, from $50,000 to $22 million. It's crazy. The guy from Chewy, who started off investing in GameStop last year, got on the board in the summer, was trying to turn things around in the fall and made some announcements. He initially bought $76 million worth of stock in GameStop. With this run-up that's being caused by the WallStreet Bets community, that is now valued at over $2 billion. So it's amazing the wealth that's been created by this. And when I say wealth, I mean, obviously it's a short-term run-up, but the ability of a retail trading community to drive the price up like that is really something that is interesting, and we ought to all take a look at least be aware of it, whether you want to participate in it or not. At least know that that is a potential issue that's out there, whether you're on the upside, the downside, whether you think it's a good thing or a bad thing. It's a crazy phenomenon that is happening over the last few days. But, on the positive side, there's a lot of people on the WallStreet Bets Reddit thread who have said things like, this is great. I was able to cash out and I took $25,000 and paid off all my student loans. Other people are saying, hey, I just made $50-some thousand and I'm going to give it to my mom to take care of my sister's Lyme disease treatments. And I've paid off my mortgage and I've paid off my car. And, there's a lot of people who are making money from this who is going to really be a positive impact in their life. But it is crazy to think that just a few days ago, at the beginning of January, this stock was down at $17 or $18, and now it's up at $350. And so it's just something to look at, to look forward to watching over the next few days. When people like Elon Musk are tweeting out and recognizing that something is happening, I think it's only going to move stuff even further. So keep an eye on it. And listen, I want to tell you, thanks again for checking in with the channel, for watching the videos. We really appreciate it. If you found it entertaining and helpful, do me a favor, smash that like button. Be sure to subscribe down below. Hit the little bell for notifications so you get those every time we post a new video. It really helps us to grow the channel, and it pushes out, the YouTube algorithm will push out our video to other people so that more people get to see it, and we really appreciate it. And again, thanks for checking in. We'll see you next time.